Are we back above pre-pandemic housing inventory levels because 17 states are above that level? Did California make the cut? We're seeing some of the lowest turnover in decades. Where does San Diego fit on that list? And the Fed cut rates, but Powell said no December rate cut is guaranteed. So what does that mean for mortgage rates? Let's get into that right now. So 17 states are back above pre-pandemic 2019 housing level inventories. And we're going to see where California ranked on here, because 2019, we like to say, is the time when it was a more normalized market. We saw a normal amount of homes on the market. We saw a normal amount of sales. During the pandemic, we saw all of that crash, but we have seen a lot of states, including California, start to make a recovery. This is important when assessing home price momentum. If active listings start to rapidly increase as homes remain on the market for longer periods, it may indicate pricing softness or weakness. Conversely, a rapid decline in active listings could suggest a market that is heating up. And so national active listings are on the rise year-over-year basis, plus 15% between October 24 and October 25. This indicates that home buyers have gained some leverage in many parts of the country, including here in San Diego, just not as much you'll see as other places. So some sellers markets have turned into balanced markets, and more balanced markets have turned into buyers markets. I would say we are skewed towards this one here. We were into a heavy seller's market. We're skewing a little bit more towards a balanced market, meaning we're not seeing, homes go a crazy amount above list price. There's still some competition here and there. The buyers are getting a little bit more negotiating power from right off the bat, from offer price to repairs. Nationally, we're still below pre-pandemic inventory levels. So minus 9% below of October 19. Like I said, that's just the time frame when we consider it was a more normalized market. See, 2025 has outpaced all of the previous years as far as national levels go. You can see the 2020, we saw a huge drop off here, and then every other market has been a rise and a fall as we go towards the end of the year. So 2025, we haven't seen it cross over that 2019 here, but we are on the right track. And it's interesting to see this here. So as we're looking at the October inventory or active listings throughout the nation, October 2017, we were close to 1.3 million. Now we are at 1.1 million. But look at some of these times. October 2021, we were at 565,000. So inventory was super low. That equals a ton of competition. That is, like it says right here, overheating during the pandemic housing boom. And here's year over year. We're sitting right here in California, 14% above where we were in October of 2025. But if we go to pre-pandemic levels, we did not make the cut as far as being above that level from 2019. We're still about 9% below that, but trending in the right direction. So here's the San Diego market roundup, and this chart is from a newsletter that I'm subscribed to, and it is a local investor, and he breaks down the market every week. Next week, I'm actually going to have his predictions for the next 3 months, the next 6 months, and the next 12 months to give you guys an idea of what he is thinking. So his headline says the trend line continues, where we have new listings down about 13%. We have pending sales down just about 3.5%, and new sales, closed sales, down almost 15%. Active inventory down a touch, and the 30-year fix is actually up a little bit, which we'll dive into that a little bit later on. So here's the breakdown of that chart. New listings dropped again, 557 this week, down almost 14% from the recent average. So fewer sellers are jumping in as we head towards the holidays, which is typical during this time. So as we're looking at all this data and as we're bringing all this to you, we always have to take in seasonality, what's happening this time of year. Year over year, it might be up, it might have changed a little bit, but as we're looking at the trend from the previous month, we're going to see that number down just because we're heading into the holidays. We're heading into kind of that slower season where we typically do see less sellers jump into the market. Pending sales, number of homes that went under contract came in at 437, just a small 3% dip, which means buyers are still out there. They're just moving a little bit slower. And yes, we have buyers actively looking out there right now. There is, like, one of the things that happens right now if you are looking during this time is less homes on the market, but typically you're going to see less buyers out there. So this pending sales is kind of a good indicator of where demand is. So if this number is super low compared to previous years, that means we are seeing less buyers out there, less demand out there as a whole. If we're seeing less month over month, it could just be a little bit of a seasonality. Closed sales fell a bit more sharply, down 15%, but remember those deals went pending a month ago. So closed sales are kind of looking back 1 month. They take, 30 to 45 days to close. So this number is looking back about a month or so. Active inventory also ticked down slightly to just over 6,000 homes. This is taking on the new homes plus homes already on the market, showing the usual fall tightening we see this time of year. When he wrote this newsletter, the 30-year fixed rate stayed almost flat at 6.28%. I'm going to show you where it is as of today. But as we see that, buyers are getting used to that mid-6 range as opposed to that high 6 range, somewhere between 6.5 and 7%. We're under 6.5 is where we have been for the past little bit. But the quick takeaway, nothing crazy. It's that typical late October cool down, fewer listings, slower pace, but still some solid activity for well-priced homes. And here's where we sit for San Diego. Active inventory versus 2019 pre-pandemic levels. This is the Realtor.com data. We are sitting at 17.5% below where we were. So even though California was like that 9% below pre-pandemic levels, we have a little bit more work to do here in San Diego rather. Now another trend we're seeing is the turnover right here. How long are people staying in their homes? Only 28 out of every 1,000 US homes changed hands this year, the lowest turnover in decades. I think partially because a few different things. Well, first off, affordability challenges and uncertainty about the economy are keeping buyers and sellers on the sidelines. And I'll show you where San Diego does rank in this, but it also has to do with where a lot of people are in with their mortgage rates. They're deciding to stay in their homes a little bit longer as opposed to selling their home unless they're relocating. Like we had some clients who were selling out here in Carlsbad. They were moving out of state and their purchasing power where they were going was much more than it was right here. So it made sense for them to sell their house here that they owned for over a decade, move out there, pay off that current house that they're buying for cash. Now that is one trend we have been seeing where people are leaving and going to more affordable areas. But the US home turnover at the lowest rate in decades, looking back to 2012. This is home sales per 1,000 homes. In 2012, we were sitting at 33.9. In 2021, at the peak of the frenzy, I guess you could say, it was 44.4. And now we have dropped down from 2023, 2024, all the way down to 2025, where we're sitting at 27.7. And here's some of the reasons that they are saying. So affordability challenges have kept many home buyers on the sidelines. Home prices are near record highs and borrowing costs remain elevated, causing the number of sellers to far outweigh the number of buyers. I would say right here in San Diego, the number of sellers doesn't far outweigh the number of buyers. We're a little bit more even. Even some homes where we see them coming on, because we are still under those pre-pandemic kind of normalized levels, we're still seeing cases where there is multiple offers. A home that we're closing on later this week, we actually had to beat out 2 other offers. So there's 3 offers in on the property and our clients end up getting it. Now it wasn't going crazy above list price. It wasn't going, it wasn't like a feeding frenzy. We got it right around list price and good terms and all that kind of stuff. Still get to keep all their contingencies, all that. But there is still demand, especially in certain price points in certain areas. So and that's why it's so important whether you're a buyer or a seller to know what's going on as a buyer where you're looking, as a seller where you're living, of what's going on in your specific neighborhood. So if you guys want to know what's going on in your neck of the woods, go check out the first link down below and we'll let you know what's happening right in your area. Second up, sellers are unwilling to give up their low mortgage rates. Nearly 70% of mortgage US homeowners have a rate below 5%. Well below the rate of 6.17, which I'll show you where we are right now. While the share of mortgages above 6% is at a 10-year high, many homeowners are still rate locked and unwilling to sell. And the third part being economic uncertainty has made buyers cautious. And if we look here, homes turning over the least are in New York and California. So San Diego made it 7th on the list right here, only 16.3 sales per 1,000 homes. So you have a minus 2.4%. And so as you have inventory a little bit down historically compared to pre-pandemic levels, you still have some buyers out there. You have mortgage rates coming down a little bit. Like I said, more balanced market, not necessarily a full buyers, not necessarily a full sellers, depending on what price points you're looking, what type of home, all that kind of stuff, what areas. And that's partially why we have seen prices maybe just take a little dip as we go towards the end of the year. but we haven't seen any massive drop-offs. So real quick, new listings down a little bit compared to last year. Number of closed sales up a little bit compared to last year. Median sales price down about 1% compared to this time last year. The median days on market about 8.5, or let's just call it 9 days above where we were last year. And then here's one where we've been keeping a close eye on, off market in 2 weeks as a percentage of pending sales right here in San Diego County, where we saw a little bit of a deviation from our typical pattern. This usually would continue to go down as we go to the end of the year, but right here in that mid-July timeframe, we actually started seeing it go up until, I mean, there was a little tick down from 39.6 to 39.3, but still 2.7% above last year. So just goes to show there is still some competition out there. There's still about 39% of homes that are going pending within the first 2 weeks. And then just recently, the Fed cut rates, but Powell says December cut is no guarantee, which has kind of thrown a wrench into a few things. We saw mortgage rates go up quite a bit, which I'll show you here next, but Zillow maintains expectation that mortgage rates will struggle to break below 6% in 2026. So what happened? Evidence of accelerating cooling in the labor market hasn't shown up yet in alternative data because the government is shut down, so we don't have the government data. But Powell noted that in the absence of major government data release, the Fed has relied more heavily on alternative indicators. While the data sources may not capture subtle shifts in the labor market, they would likely detect major changes. And so far, no such shifts have emerged. So Powell likened making policy decisions under uncertainty to driving in the fog, where the best course of action is to slow down. Where will rates go from here? Mortgage rates have fallen notably in recent months, providing a tailwind for housing demand during what is usually a slow time on the calendar. With a cooling labor market, mortgage rates may drift slowly lower through 2026, but still Zillow expects the 30-year fixed rate to remain confined within the 6 to 7% range. And if we do see it drop, I mean, even when we saw it drop below that 6.5% range, you see there's more people applying for mortgages. There's more refis going on, as some people maybe a few years ago were locked in at 7% or above. They're going to refi at that 6.5%. So once it drops in that 6.5%, we saw that pick up a little bit. If we see it drop under that 6%, just even a 5.99, psychologically, yeah, it's real. I mean, 6%, right? But we will likely see more people at least go get pre-approved for mortgages, potentially restart their search back up, especially as we are going into the spring buying season right here in San Diego, going into early next year. And here's where we were prior to the Fed meeting. We dropped all the way down to 6.13. And then right after that, boom, jump back up to where we're sitting today, about 6.33. So we'll keep an eye on what's going on and what actually happens in as we get closer to the December meeting. If there's indications that he might actually cut, if there's a little bit of weakness in the labor market, if there is a little bit more inflation than expected, then you could look at more likelihood of a cut. And that likely indicate the Fed leaning more towards a rate cut in December. Now, Fed rates don't necessarily control what happens right here in the mortgage rates. It's going against what the 10-year treasury, we track a lot closer to that. If the 10-year treasury is dropping, you're gonna see this drop. So keep a closer eye on that. Even if they do cut rates, it could be priced in here already. So it's important to know what's going on with the market as a whole, but it's really important to know what's going on in your situation. So if you guys are thinking about making a move, start those conversations early. We could dive in. Yeah, all these numbers are important and stuff, but it really comes down to like let's figure out your budget, what you're looking for, what areas you're looking for, all that kind of stuff. And then you can set up a plan as far as, you're not really gonna time the market. You're gonna buy when the time is right. You're gonna sell when the time's right. It's not necessarily, ooh, rates are down, I'm gonna go buy right now. You might see a little bit more, like I said, some of those refis when the rates drop down, but typically when the time is right for you, that's when you're gonna buy. So if you guys want to know what's happening in your neck of the woods, go down and check out that first link right down below. And if you do wanna know the real value of your home, go check out the second link right down below. And I'm Erickson with the Living in San Diego crew, and we got your back when making the move here in San Diego.